Good morning. This morning we want to focus on euro dollar, but briefly we want to talk about the dollar index. Now the dollar index, we had a bearish outside month at the Fibonacci confluence area around about 102, the figure, and that keeps our long-term outlook negative for the dollar. However, if we break down to an intraday chart, and this is a 6-hour chart, it gets quite complex, but we've basically seen a 5-wave move to the downside, seen a wedge breakout, a move higher in what we believe to be the AB leg, and then this move lower in the CD leg at the latter part of last week. And now we look to be forming this last corrective leg, this CD leg to the upside. Now this is our prime reversal zone, which is the 78.6% pullback level, around about 102.83, and that in turn will make a bearish Gartley and then lead the dollar lower once again. So this is regarded really as a counter trend move in the big picture, and we have got to express a bit of caution with this forecast. So breaking that down and reflecting that back onto euro dollar, first of all, the monthly chart here, we've got a bullish engulfing candle, spiked lower then pushed higher, so that gives a mild bullish bias. Weekly chart doesn't really give a great deal away. In the long term, this could be ahead. We could move higher, form a neckline around about here, and then move back to form a right shoulder. But like I said, it's far too early to call that formation. There's nothing really here that gives much of an indication and any sort of direction for the major currency pair. However, the daily chart here, we look to be forming the opposite to the dollar, and look to be forming a reverse head and shoulder. So this being the left shoulder here, this being the head, and then this being the right shoulder. So again, moved out of a wedge breakout, moved down to 61.8%, which obviously again has to give us a little bit of caution. Move to the upside, but now we look to be moving lower again in this ABCD formation. And in fact, the ABCD target, which is around about 104.46, and this 78.6% pullback level is virtually perfectly aligned with a potential right shoulder. So we're looking for this corrective last leg in euro dollar before bulls reappear. So our call today, and like we said, a little bit of caution because it is counter trend, is to sell euro dollar at our bespoke resistance, which is at 106.40. A stop can be placed at 106.80, and there's one target, and we're looking to forecast or reach that target this week, and that's 104.50.